Good morning. Here is today's Korean economic news briefing. Today, our economy stands at a critical juncture, navigating the escalating geopolitical tensions in the Middle East while seeking new avenues for growth and stability. The government is taking swift action to address immediate challenges, while the financial markets show a mixed reaction to the global situation. Let's begin with the government's proactive measures to mitigate the economic fallout from the Middle East conflict. Vice Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, announced significant steps yesterday during an emergency economic headquarters meeting. To alleviate supply chain bottlenecks exacerbated by the ongoing conflict, the government will drastically shorten the import period for critical chemical substances like paint, by applying special exemptions to import registration procedures. This aims to ensure a stable supply of essential industrial materials and prevent disruptions in manufacturing. Further demonstrating this commitment, the Vice Prime Minister also revealed plans to reduce the inspection period for standard waste bags to just 1 day, adjusting inventory and reallocating them to local governments. This seemingly minor adjustment is part of a broader regulatory rationalization effort designed to remove hidden bureaucratic hurdles, numbering 251 in total, and enhance economic efficiency. For instance, new regulations will permit the installation of solar panels on highway soundproof walls, a move that supports renewable energy goals while optimizing public infrastructure. Additionally, express highway rest stops will introduce AI-powered customized background music, and installation standards for liquid hydrogen charging stations will be eased, alongside simplified procurement, bidding, and payment procedures for public institutions. Recognizing the potential for the Middle East conflict to constrain consumer spending, Vice Prime Minister Koo stressed the urgent need to prepare supplementary measures. He highlighted concerns that supply chain worries could extend to daily necessities and emphasized appointing dedicated officials for specific vulnerable items. Furthermore, to facilitate the use of alternative packaging materials, the government will temporarily relax relevant labeling regulations. These actions collectively underscore the government's resolve to act as a steadfast helmsman amidst the turbulent economic seas, aiming to minimize the impact on both industries and households. Shifting our focus to the broader macroeconomic landscape, we see growing concerns about stagflation. The Middle East war has sent oil prices soaring, driving up consumer prices, yet domestic demand shows signs of weakening. The National Statistical Office reported that consumer prices in March rose by 2.2% year-on-year, a slight acceleration from the previous month's 2.0%. This simultaneous rise in prices and weakening demand amplifies fears of prolonged stagflation, posing a significant challenge for policymakers. The global economic environment adds to this complexity. The U.S. fiscal deficit is projected to exceed 6% of GDP this year, a direct consequence of military actions, exerting upward pressure on interest rates. This backdrop sets the stage for the Bank of Korea's Monetary Policy Board meeting next week. While a benchmark interest rate freeze is widely anticipated, the market will closely watch for the central bank's assessment of the Middle East situation's impact on the domestic economy and any signals regarding potential interest rate adjustments later in the year. In a contrasting positive note, Vietnam announced ambitious plans to achieve over 10% annual growth between 2026 and 2030, aiming to become one of the world's top 30 economies by GDP, driven by stable inflation, fiscal deficit, and public debt management. Moving to the financial markets, South Korean stocks showed strong performance yesterday. The Kospi surged by over 3%, breaking through the 5,300 mark, while the KOSDAQ also saw a robust 1% increase. This rally was largely driven by institutional buying and a notable rebound in major tech stocks like SK Hynix and Samsung Electronics. Concurrently, the won strengthened against the dollar, with the exchange rate dropping by nearly 9 won, and government bond yields fell across the board. Much of this positive sentiment was fueled by cautious optimism surrounding the potential opening of the Strait of Hormuz, which could alleviate global oil supply concerns. However, the underlying issue of surging oil prices due to the Middle East conflict remains a significant burden for the economy. Amidst this volatility, certain sectors are proving resilient. Specifically, food companies like Samyang Foods, known for its bulgogi ramen, are performing strongly, particularly benefiting from high exchange rates, making them attractive for investors looking for stability in turbulent times. In the realm of industry and trade, the government is actively seeking to fortify critical supply chains. Korea and France have strengthened cooperation in key areas such as critical minerals, semiconductors, and nuclear power following their summit yesterday. This strategic partnership aims to diversify supply sources and enhance technological resilience, especially pertinent given Korea's high oil dependency. the highest among OECD nations at 5.63 barrels per $1 million of GDP in 2024, and its concentrated reliance on Middle Eastern imports. However, the automotive industry faces a multi-hardship scenario. Beyond the Middle East crisis disrupting parts procurement and finished product shipments, the sector is also contending with new U.S. tariffs, specifically a 25% duty on steel and aluminum heavy products. The government has pledged increased logistical support and financial aid to help auto manufacturers navigate these challenges. Meanwhile, innovation continues apace in the semiconductor industry, with Elon Musk reportedly envisioning dirty fabs for 2-nanometer chip production, potentially challenging conventional cleanroom standards and reflecting a bold, unconventional approach to advanced manufacturing. On the domestic real estate front, Seoul's apartment market is witnessing an intriguing trend. Price increases are being led by properties in the outer districts. Despite government efforts to curb housing prices, limited supply and strong demand in these relatively affordable areas, where policy loans are more accessible, are driving up values. This phenomenon is exacerbated by a shift towards a monthly rent nation, with more than half of apartment rentals now being monthly due to rising loan rates and difficulties in securing Jaeon's loans. Upcoming developments, such as the Icheonla L remodeling project in Yongsan-gu, are expected to draw significant interest as potential lottery sales under the current *Banyanga-Sanghanji housing price cap system. Internationally, trade protectionism continues to be a contentious issue. French President Emmanuel Macron, during his visit to Seoul, publicly criticized the U.S. approach to tariffs, stating that France respects international order and does not impose tariffs like the United States. This came as the U.S. implemented new tariffs, including 25% on steel and aluminum, and up to 100% on patented pharmaceuticals and raw materials, impacting even allied nations like Korea, though some trade partners have lower rates. These actions reflect the ongoing shift in global trade dynamics and the potential for increased friction, especially as U.S. President Donald Trump reportedly considers cabinet changes amidst fluctuating approval ratings. Finally, in the burgeoning field of AI, Korea continues to demonstrate its commitment to innovation. Local giants like Samsung Electronics, Hyundai Motor, LG, and SK are pouring record amounts into R&D, positioning Korea as second globally in R&D investment relative to GDP. The Minister of Trade, Industry and Energy, Kim Young-kwon, recently underscored that the AI transition in manufacturing is aimed at creating jobs, not displacing them. Globally, tech giants are making major plays. Microsoft announced a substantial $10 billion investment in AI infrastructure in Japan, underscoring the region's importance. This investment tide is clearly benefiting Korea's tech sector. Samsung Electronics' first quarter earnings surprise was overwhelmingly driven by explosive demand in its semiconductor division, largely attributed to global AI infrastructure investments. Meanwhile, in the AI startup IPO space, Anthropic is gaining investor favor over OpenAI, with its business-to-business model seen as providing more stable revenue streams. Before we conclude, a quick look at two immediate impacts on daily life and investment trends. Fuel prices are a significant concern, with gasoline and diesel averaging over 1,900 won per liter nationwide, and Jeju Island nearing 2,000 won for the first time. This direct consequence of the Middle East conflict highlights the fragility of our energy supply. Simultaneously, we're observing a distinct shift in investment behavior. Seohokgami, or Korean retail investors who had previously invested heavily in overseas stocks, are increasingly returning to the domestic market, with a notable interest in semiconductor ETFs, suggesting a re-evaluation of risk and opportunity closer to home. Experts warn that the ongoing war could intensify societal polarization, creating superpolarization, as different segments of the economy and society experience varied impacts. On a positive note, AI is increasingly being integrated into assistive technologies for people with disabilities and the elderly, expanding possibilities for independence and quality of life. For investors, the current environment demands a careful balance. While the Kospi shows resilience on hopes of easing geopolitical tensions, the underlying risks of stagflation and high energy prices persist. Focus on sectors with strong fundamentals, those resilient to high exchange rates like food manufacturers, or those benefiting from long-term trends like AI and strategic national partnerships in critical minerals and semiconductors. Be mindful of global trade protectionism and its implications for export-oriented industries, particularly automotive and steel. For general viewers, the government's efforts to stabilize supply chains and mitigate consumer impact are crucial to watch. The rising fuel prices directly affect household budgets, making energy conservation increasingly important. The evolving real estate market, with its shift towards monthly rents and rising prices in outer Seoul, indicates a challenging housing environment. Staying informed about these developments will be key to navigating the economic uncertainties ahead. That concludes today's Korean Economic News Briefing. Thank you for joining us.